Six heavy market contexts usually need several separate charts. In QV terminal, they stay in front of you as compact pressure gauges. This is a deliberate format. A curve or a histogram shows history well, but it takes space from price, needs its own scale, and keeps pulling your eyes away. A gauge answers faster, where the reading is skewed, how strongly, and whether the independent data agree. The bottom panel stays functional, not decorative. You can hide the scales you don't need, arrange the rest in any order, and save that configuration for your workspace. Every gauge shares one visual grammar. The center means a neutral state. A shift shows the character of pressure. The edge, its extreme intensity. But color can't be read as a command to buy or sell. What each side means depends on the specific metric. CVD, cumulative volume delta, sums the difference between market buys and sells. Right means aggressive buyers, left, sellers. The key is the comparison with price. A rise with no CVD behind it signals absorption or a fading impulse. OI shows the change in open interest, new leverage entering or positions closing. Right means OI expanding, left contracting. It matters only with price and CVD. A rise on growing OI differs from one on old positions closing. Fund shows the pressure of the crowded side against the market's own history. Positive funding means overheated longs and shifts the scale left. Negative means overheated shorts and shifts it right. An extreme warns of a strong positional skew. It doesn't hand you an entry. LS combines four cuts: the balance of accounts, large trader accounts, their position sizes, and the taker buy-sell ratio. Fresher data weighs more, and checkboxes let you change the calculation to fit your logic. RSI is the classic relative strength index, but without a separate subchart. It shifts right for bullish momentum, left for bearish. The edge means a stretch state. Overbought doesn't equal sell, and oversold doesn't equal buy. Bias isn't a new data source, but a combined reading of CVD, OI, and funding. It weighs their agreement, acceleration, and unusual pressure. Raw reacts faster. Smart balances speed and noise. Confirm asks for stricter confirmation. When price rises, CVD confirms the buyers, OI expands, and bias holds to the right. The move gets more substantial support. And if funding and LS show no overheating, there are fewer signs of one side being overcrowded. A contradiction between the scales isn't an error, it's a useful warning. Price can keep rising while CVD weakens, OI contracts, and funding shows crowded longs. Then the move may be tied to positions closing or to a late phase of the impulse. Together with LHM, the gauges help you judge which computed zone gets more confirmation. DOM shows large limit liquidity, CVD who's actually attacking, OI whether leverage is being added, and funding with LS whether one side has become too crowded. LVL adds the levels of past fighting, and LIC the forced closures that actually happened. Near areas like these, the gauges show the current state of flow, leverage, positioning, and momentum. Agreement strengthens the scenario. Divergence calls for a pause. The gauges don't make the decision. They make heavy data simple, comparable, and always kept next to price.